horizon, turn us to thousands, and we'll grow in number, fueled by them to see the horizon, turn us to thousands, and on we'll go, through the wastelands, through the highways, till my shadow turns to sun rays, and on we'll go, through the wastelands, through the highways, and on
Open eye, feel the waves cut through me, hypnotized by the sounds I'm breathing in. Hold tight, chemicals collide. Hold tight, hold tight, hold tight. Dripping lights paint the skies, all because of you. Dripping lights paint the skies, only you can make me move. You can make me move. Can make me move. You can make me move. Can make me. So alive, make it last forever. Stop in time, yeah, I'm surrendering. Hold tight, chemicals collide. Hold tight, hold tight, hold tight. Dripping lights paint the skies, all because of you. Dripping lights paint the skies, only you can make me move. You can make me move. Can make me move. Can make me move. You can make me move. Can make me.
like you, be strong to hold the powers of the sun. To dream, believe in strength. Now I'm the only one, only one. I was an ordinary boy until I broke the rules You're a superhero. Can I be your superhero? Superhero. 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 Can I be your superhero? Over the edge, feel like I'm floating through the air. The pain I felt is paid for, all is said and done. Oh, I am restricted, fixed upon the web. I need to kick the habit that my mind is breathing in. Break out, I've got to see. Spent all my life holding all of it closely. I played it innocent, a feel of discontent. I'm finally facing it all, fearless.
Hey everyone, to a new session. Today we're gonna talk about the common mistakes and trading biases is happening in the stock markets while you're trading. You get stressed, you get confused, and you're not making the right decisions. And mostly it is because of human psychology. And for today, live we're gonna talk about human psychology and the biases is coming from you while you are trading, and when especially when you are starts there is many biases. I especially I learned it on the hard way and figure it out much later. I wished I could figure it out sooner. Today I wanted to share with you my experiences and what I learned from those biases and how we can make a better decision in the future from my mistakes so you can get better at trading at my cost. No cost for you especially. When it's coming to biases, there is this. Let's switch to the next slide. When it's coming to biases, it is very important to understand, first of all, that you are currently in a bias inside. Okay, one of the biases could be when people, okay, the loss aversion bias, for example, when the pain of losing money is greater than the pain of winning money. So when you have a trade open and you and the trade is losing, and you put already your stop loss and you're putting your stop loss even making it bigger, so for the hope the trades ends better or the market make a corrections. um, the first of all, we should understand that we are currently in a bias. Let me show you few of biases. I'm going to my LinkedIn, where over there I have also published a published few also published a week ago the same biases we're gonna talk today about. Okay, let's go over here. I think it was here. uh can we make it bigger? Sadly we cannot make it bigger. No worries. So let me switch to the much better, much better, much better. So one of the trading biases are optimism, pessimism bias, and many traders is just like get stuck in the bias. um what is happening that in the first example, in the optimism pessimism bias, you get euphoria when you win, based on the past results. You emotions change. You, for example, if you have won in the past multiple times in a row, you are expecting to win again, and your emotions are quite toward it. And this one of the biases happening. And many people, when they start trading, they start losing money and they get very pessimistic and have the distance from trading at all. If you ask your parents, your grandparents, what was your experience about trading, he's gonna tell you, get your finger out of this subject because they already lost the money and they are in the pessimism bias. So the one important thing is to understand in this case is that trading is not gambling. Trading is based on strategies and analysis you make. So you avoid losing money with right strategy of risk management. And in the future, we're gonna talk more about risk management, how you can make better stop losses, how you can look for stop losses, where you put your stop losses, or how you can manage your portfolio and the risk management levels. So how to diversify your portfolio and use more complex systematic to analyze your portfolio, even you analyze your trades more than the usual ones. And the first of all, when you figured out you are in the one of the seven biases, then you should overcome it. Okay, I'm gonna give you tips and tricks to how to overcome it. As we said in the optimism bias or the pessimism bias, you have the feeling now feeling great because of the past won trades or feeling bad because of the past bad trades. So then you understand you are currently in a bias and you should overcome it. There is the challenge. Um, Underlining this, you should also behave towards this bias and take an action toward. Okay, first of all, recognize it. Okay, you should understand how to overcome it, take an action toward, and next time do it better. Four ways to how you can overcome a bias. First of all, recognize it, overcome it, recognize it, understand how you can overcome it. Third of all, take an actions for next time do it better. So let's move on to the next slide. The first bias I will talk about is the optimism bias and the pessimism bias, which we already mentioned a little bit more in the last few minutes, and now we're gonna dig a little bit deeper to it, towards it. It says people tend to have more unrealistic performance in the past. Okay, for example, all of us can get lucky in trading. It says no worries. It could be that many times in the row your predictions has been correct, but this is not has been tested on the statistical way or on the bigger time frames and datas and the bigger larger datas. So you tend to have this bias. The past performance is gonna be always the recent performance. The traders all or nothing approach. They take this approach, all or nothing. So many people in the psychology, when they cut in this bias, they take losses, much more losses than they usually should have, because as I said, they are changing the stop losses or changing their mind because the market is not in their favor. So they have always unrealistic expectation, which could have a barrier between the success and failures, which is affecting the emotions and the way they are thinking. And when the trade is not fulfilled, then they are disappointed. This is shouldn't be the case with a professional trader, because when you cannot control your emotions, you will lose money. Basically, you should go through trading as objective as possible, because otherwise your emotion gonna overtake your money. So not always the past performance indicate future performance, but it is in trading past performance a likelihood. You should think in probabilities that it's gonna happen again, uh, not rather in it's just gonna happen for sure. It's just like more probabilities. Okay, the price action was at 100K or $100 and it is more probable it is gonna come back to this level because it is an important level having a lot of buy orders, stop orders there, and people want this price exactly of $100. For example, let's take an example. We have 5 apples each season, and in September, I think currently it is the apple times in Europe. You can harvest the apples, then and we have our 5 apples, and each years, okay, we have those 5 apple, and each month, each each September of the year where the apples come to the markets is cost approximately between $4 to $7, I would say, each apple. And this time, and when it is a rainy season or a dry season, then we have less apples or more apples. And this is also changed the price behavior. So you can also use probabilities, the harvesting, and other conditions which could influence the harvesting of apples. You should also think of probability always. So the second bias we should talk about is his loss aversion. The loss aversion, okay, is basically said traders tend to be selling before hitting their target or closing their positions because of the fear. And as I said, the main problematic many traders have, they have fear in their hearts because they have not statistically way proven that they have a strategy, a winning strategy. They were just lucky. And we don't want to be lucky. So if you're lucky, you're gonna have fear of losing money and losing your profits. And even they are looking forward to have more wins, okay, to tendency to holding their winning positions. What does it mean? For example, your entry price was $100 and your target was $110 and you reach already your target and the price of the stock still moving up, and you tend towards not closing your position in hope the price go ups more and more and more. So the same vice versa for stop losses. So your entry was at $100, your stop loss was at 90, and the price going down 90, 89, 88, 87, 86, and you are not closing your position in hope the stock market price and the direction and the trend changes. So in the back testing, even when you try to even backtest these results, it could be great as a past is not indication for future. As I said previously, we should think always of probability that it's gonna happen again, and the market gonna hit it again. The probability of 60%, probability of 70%. This means the out of 10 times you're gonna be 7 times right because you have done your back testing. And in the back testing, there is also biases in it. It depends how you test it, of course. You should always look for it, how you calculate your wins and losses. And of course, in the back testing, there is no emotion involved because you are not live trading with real money. So what you see, okay, while we're talking about this, let's go to trading view and trade trading view. Let's go to trading view. And in the trading view, we have paper trading, and in the paper trading, you you can test your strategy. How you can do it currently, I think trading view price. Let's check it. I think trading view currently have like a discount. Okay, trading view. Let's go Google trading view price. I think TradingView currently have discount, subscription discount, or is this already? I think it was only for 1 day. Okay, it was only for 1 day, and sometimes TradingView have great discounts. Those discounts are quite good. For example, I think it was at $1 for 1 month TradingView. And when you go to TradingView over here, let me change this to Bitcoin, for example. And and you go here. Okay, let's delete this. We don't need this. And go in the past. Let's pick a time frame up. In the corner, you see we have different time frames which you can look at the charts. 1 minute, 3 minutes, 5 minutes, 15 minutes, 30 minutes. The better way to how you can do it is going to the upper time frames, weekly or daily time frame to see the bigger trends. And when we go to the daily or the weekly time frame, we can exactly see that Bitcoin had a quite clear upward trend, exponential trend. And many charts it is moving exponentially. And if you look at it, it is not linear moving. The stock market is exponential chart always. And let's go back to the daily time frame. And when you look at the daily time frame, Bitcoin is also in the upward trend. Clearly we can see it, and how you can also see it is a possibility to make trend lines, to draw trend lines up there. Everyone drawing the trend lines on different bases. I draw mines to see many points or many pivot points is touching my line as possible. So I'm looking for many points that is touching my line. So in this case, we have upper trend. What I wanted to show to you is this back testing. Okay, let's go back over here using the tool up there, the reply button here, the bar. Okay, you can use it and go back in the past. Even changing the daily time frame to the lower time frame, you have more clear strategy over here. In this case, we are not talking about Bitcoin. Let's go switch to Bitcoin. We are talking about something else. So what we have here, I think we have a quite an indicator open. Let's remove the indicator. Okay, and we have an indicator open. Let's go to the daily time frame, and let's go back in the past even, and using the reply tool. Okay, I want to go here in the past and using this, and with this I can choose the buy. Even you can see here I had an order in the past, and we can like play it what's happening in this case. Exactly, I had an order over here. Okay, let's move towards, let's delete this, to the lower time frame, how my order has played. For example, in the past I placed over here an order, and my order is played perfectly, exactly, without any down divergent to the downside. So it is quite well trade, well played trade. So using the paper trading and reply bar in the trading view, you can test your strategies, or you can do it in the more advanced way, code your own strategy into Python libraries, extract the data from Yahoo Finance, for example, the price, the stock market's price, opening, closing, high and lows. And as you see, if you don't know what I'm talking about in this case, in the stock market, there is always in the candlesticks. Let me search for the perfect one. Okay, I think this red one is great. Okay, we have an opening price. The price opened here, they closed here. The lowest price was there, down there. The price closed here. Okay, the highest price was there. Highest price opening, highest price high, which is we refer it as high. Let me see if I can write text. Okay, high. This is a little bit. I'm seeing that I'm having lags. Okay, could be okay. Yeah, yeah, yeah. Makes sense. Okay, basically said. Let's just Google it. Candlesticks. What you saw is was candlestick explained. As you see, I think this one is great. It says you can choose the colors, but in the most cases for the bullish and bearish candlesticks, you have the green and the reds. And up there is the high. Okay, if you cannot see it well, let's go zoom it a little bit more. We have the candlestick. Okay, up there is the high, and down there is the low. The open and the close depends. If it is red, then it is meaning a bearish candlestick. If it is green, it is bullish candlestick, where the opening price is lower than the closing price, and the vice versa is true. When the bearish candlestick is the opening price is higher than the closing price. So the stock market, for example, in the New York exchange is open later at 15, 16 o'clock, and it's closed at 9 p.m. And in Europe time, of course, depends where you are in London or in middle of the Europe. And this means the close the time the market close or the market opens. Or in the Bitcoin case, it is as you see, you choose the time frames. And in the 30 minutes, it is the highest points was here. The highest price in this candlestick went there, the lowest went there, and it closed there and is open there. And it's very important to understand that. Let's go back to our trading psychology and biases. We have understood the loss aversion, and many traders when they are starting trading is they have effect of evaluations. This means they are giving credit to their skills. For example, I'm great at the technical analysis and the fundamental analysis. I've done have ton of research, and that is why the reason I performed well at trading. And when something going bad, they're gonna tell, okay, the market did it, the big whales did it, the market maker did it, or the news did it, or the company did it. They are blaming always the external factors. And this is problematic because it is disrupting you learning process because you are not taking it objectively. In the best way how you can do it is to do it in probabilities. Okay, so okay, this is case is happened because the XY factor played. This case happened because XY factor played. And you can use a U trading journal to write all those factors happen, where you enter the trades, where you close the trades, and so on. And more to it towards it. So sorry. So be careful while you are looking at self-serving bias. Not everything is happening because you are great at trading. Not everything is you are doing bad because of the external factor. You always should have systematic way how you should analyze your charts. Depends on the industry, depends on the sections, and so on. For example, if you are more into crypto, there's different analysis types. On if you are doing only the top 10s, the big coins, Ethereum, Solana, and so on, BNP, and so on, then it's gonna be different analysis than shit coins. Or when you are doing a stock market, okay, understand, okay, which industry they are in, the financial, in the technology, and who they are competitors, doing fundamental analysis, which revenue they had, which the management discussion is saying, which the analyst is saying about the company, and what was their past performance, what's the estimates for the futures, and their PE ratios, and so on. Okay, if you didn't know what is a PE ratio, it is telling us how much an investor is willing to pay for $1 of earning of the company. So in technology space, it is approximately around 25 PE ratio, and it is $25 investors are willing to pay for a technology tech company for $1 of their earnings. Why they are doing this? They are greedy, I would say. In the most cases, they are greedy. And also the PE ratio calculation based on the competitors and other factors have a standard average. For example, as it said in the tech 25, everything higher than 25 means overvalued. Okay, in basic word sets in the relative analysis of the company. So let's move on to the confirmation bias. So when you are selecting information, as said previously, you should take factors and do your trading journey. And this time, while you are doing your trading journey, okay, you selected a specific set of factors which is influenced. It could be because of the trend lines, because of your technical analysis, because of the past performance, and so on. And you took this set of factors and leave the other factors, for example, news, competitors, and other factors of the company away from the equation, which is lead to misleading strategy and to losses in the most cases. And this is having a lot of impact on your strategy. What you can do, not always think in the box, think out of the box. Open your minds and think of potential ways which have influenced your stock or your crypto or whatever you are trading. So you set it your stop loss. Okay, let's do a live example. Okay, let's go back to our chart. Okay, and this is great. Okay, this is great. Let's use again the replay or not reply. You can reply, of course, in the live session. Any questions, I'm always here. I would love and be more than happy to help you out. Let's go back. Where is what's happened over here? So let's use replay. Okay, and see over here. Or let's move to somewhere. I didn't do any lines, any drawing. For example, okay, in the confirmation bias, okay, I'm looking at the BTC USDT price, drawing my lines, okay, drawing my lines over here. Okay, let's move on. One more lines. Okay, I believe we are in the downtrends, in the divergence. This is called, let me say, it is bearish, bearish downtrends. I believe it's gonna go up and ignore any other factors like what's happening at this time with Bitcoin, what is the financial industry happening, what the Fed is saying, what the other people saying, could potentially have influence on the Bitcoin sentiment. I enter the trades over here, take profit, stop loss at the bottom here, okay, under the support resistance level. Okay, what's happened? Okay, it could be that I get lucky. Okay, we are playing at the same times. Okay, okay, interesting. Okay, we hit our stop loss because we didn't wait the extra confirmation or looked out why the price is moved. So in this case, okay, in this case, it says we should look out why this change happened and why the price is dropped suddenly. I'm sure there were some news over there or something happened in the with Bitcoin in connection. So let's move on to the next one. I'm a little bit got cold yesterday. Sorry. Okay. Okay, let me check the chat if anyone have any questions. Okay. Okay. Sorry. The gambler fallacy. It is first of all, we should understand the difference between a gambler and trader. A gambler who is trying to earn money through using chances are not systematical way of analyzing the risks in hope of winning, and a trader is someone who is trying to trade the financial instruments like stocks, like currencies, commodities, and more using systematical analysis, and he understands very well his risks and potential wins also. Okay, the gambler fallacy is telling us that traders shouldn't assume that past trends will continue in each new trade, as each trade is a unique event and unaffected by the previous outcome. So, as I said, the gambler fallacy is the same as the loss aversion, and is it the same as the pessimistic optimism bias. So the past performance is not telling you it's gonna be the recent performance. So what is happening in the past is not indication of the future. So the gambler fallacy is telling us each trade is independent, and be careful while you are setting your trades. And only thing each trades is not the past trades, and the pattern doesn't repeat. And the gambler trying always to look for patterns in the past and trying to win. And they're going to casinos, okay, and trying to predict what is gonna happen. And in all cases, you were gonna see the house win. It just depends only, I think, in poker if you are playing against other players like you got higher probabilities of winning. Um, and even higher probability, I'm talking about very, very, very low probabilities here, because out there are very well poker players in, of course, in the financial industry, also in the stock market. There is also many big players who has been longer than you in the market, who understand very well the psychology and everything, where you put your stop orders, where you take profits, why not, support resistant, everything is coming. They have larger machines, algorithms, and analyzing 24/7. They got a team of 200, 2000 people, even JP Morgan or or Medallion hedge fund, which is like using artificial intelligence. And so be careful Okay, the past performance is not indication of future performance, and avoid being stuck in this boxing mentality. So the patterns, it's gonna change your expectation with it. So adapt your strategy to it. So change your strategy based on that too. So let's move to the next one. Is this anchoring bias? It is a little bit similar to the previous one. Which one was it? Not gambler fallacy. It was the confirmation bias. Anchoring bias is similar to confirmation bias. Traders often fixate on the specific data points, forget what's everything else happening in the market, forget the news, forget anything, forget the technical analysis, and you focus only on one perspective because you are in good understanding this perspective and it's easy for you to get information out of it. For example, if you don't like to to run every day in the morning, and it is easy for you to just avoid it or just to do some push-ups at home because you hate running. And the same also anchoring bias having here. Okay, we tend to take the easy path and take the most accessible, easy way to understand of information. And that is why the people usually use in the marketing a lot of visualization and so on because it is better comprehensive for your brain. So how you can go around this is use multiple sources, diversify your sources, evaluate them, and think yourself if the is those sources trustworthy? Am I neglecting any other relevant information? And if you answer this question, then you will see that these most of the cases that have you neglected an information if you are not having a systematic way of trading. So so as I said, how you can overcome it, first of all, you should recognize that you are currently in in a bias. I teach you right now how you can overcome the biases. You understand the biases existing and you can overcome it. And third of all, take action toward this and, and solve it. The fourth is to to avoid these biases happens again. Yes. So also a way is to overcome it. Use in the anchoring bias, as I said, use different sources, review your strategy continuously, look at your trading journal and look for flaws. If there are flaws in it, like every time the market doing something else, but you predict it in one direction and the market doing another direction, understand why this is happening, and always write it down. In the base cases, while you're writing it down, it's gonna be perfect for time series analysis. This is gonna be perfect way to understand why you are making or taking those decisions, and based on that, you can improve. So in conclusion said, be careful out there. There are many biases which is overtaking your emotions, and those emotions, here let's make this bigger, and those emotions influencing you trading strategies, influencing your profit, influencing your losses. So while you're understanding this, many people, many traders tell you psychology is very important, and in the most cases they are talking in part of the trading psychology is biases, trading biases. Today we cover 7 of them, and next time we're gonna talk about the how you can make a trading plans and how you can make a great sleeping plans. And for that, okay, if you have right now any question, you should drop it in the box right next to you or down if you're watching this later. And thank you very much for watching. And I'm waiting for any questions to come around. Looking forward to answer it. I think no one has a question. So thank you very much for watching and see you next time.